Hey, what's up, you guys? Welcome back. So, you will notice that the setting this week is a little different, and that's because I am currently on vacation. But I did not forget to bring you guys a brand new video, and we'll switch back to the regular setting next time. But this time, enjoy the brand new views. By brand new views, I mean the couch and like a nice countertop. But anyways. Last time you would remember I made a video of the March 2022 update, and I think I went a little bit too fast in that video actually, because I should have explained my thoughts a little bit more thoroughly with a little bit more detail. So I got this comment on my last video from a person named Mr. Kim, who gave a very thoughtful comment that disagreed with my opinion that I presented in that video, so I wanted to respond. And before I make my response, I just gotta say thank you to Mr. Kim because he gave a very thoughtful and constructive feedback. So do what Mr. Kim does and tell me why you think I'm wrong or why you disagree, and don't just hurl insults. So I've got no issue with people who disagree with me, and in fact I welcome people who disagree with me as long as they're willing to counter me with logical reasoning and sound arguments. So yeah, thank you, Mr. Kim. So now let's see what the comment actually says. So he says that COVID, inflation, war, sanctions, massive debt, does that equal I don't think there will be a recession? Practically speaking, these are volatile times no matter what the label says. Stats like the yield curve have very little meaning to regular folks until they start getting laid off, so we'll see what happens. I'm a big believer in long-term investing, but I also think that Jeremy does not understand that we live in the information age. In 2023, I hope you won't regret buying now as you do buying back in January. Personally, I think we're in a topping pattern. That's kind of the opposite opinion of what I said, because what I said last time was I didn't think that there was going to be a recession, right? So let's kind of go through these arguments one by one, and I want to give my response. So first of all, I understand that there's a lot of reasons to be fearful right now. Right now, Jeremy from Financial Education, he likes to call it the wall of worry, right? So the wall of worry is what Mr. Kim just described, right? So COVID, inflation, war, sanctions, massive debt. There's, you can toss a couple more in there, but let's just start with these, right? What do I have to say about these? Well, first thing you got to recognize is that the market is forward-looking. So a lot of these things, I would argue, are already priced in. So we got the rate hikes priced in as well, right? Because Jerome Powell already said what exactly his plan is, which is to raise rates by 0.25% for 7 times this year, and it's going to target to 1.75% by the end of the year. So he already gave a very clear path. Now, whether or not he sticks to that path, now maybe that's something that we can have a discussion about, but yeah, I think in general, though, assuming that nothing of this changes, then I think the wall of worry is already established, and you'll start to see the wall of worry start to crumble or just come down brick by brick, right? So the first thing you gotta really ask yourself is that who really cares about COVID anymore, honestly? So I remember back in the beginning when COVID first came out, I wasn't even allowed to say the word COVID on YouTube. If I said it, then I would get demonetized. I actually had that happen to one of my videos when I said the word COVID. And now I can say the word COVID without getting demonetized, right? So you got to recognize as well that the places, governments, especially in Western countries, are opening back up. Places are opening back up. Mass mandates are being canceled. So I highly doubt that there is enough political will for another lockdown, right? So if any politician right now says that we're going to lock down again, I think that's political suicide, honestly. They're not going to do it, right? So unless we really get a variant that is really transmissible, like even more transmissible than the Omicron variant, and even more deadly, right? So even more deadly than the deadliest strain, which I think is Delta, right? So if we really get something that's like really, really bad, then maybe we'll get locked down. But assuming that doesn't happen, then I don't think there's going to be another lockdown again. So yeah, I don't think that people really care about COVID anymore, and Wall Street is looking forward, right? So Wall Street is also looking beyond COVID and seeing what things are going to be when a recovery starts, which is already started. All right, so that's kind of the wall of worry, the brick in the wall of worry that's coming down. And next thing is war, right? So the war in Europe, this one is kind of a big unknown, and this is obviously top of mind right now for everyone. To this, I have to say there could be a short war or there could be a long war, right? So personally, I'm leaning that it's going to be a short war, just because the way that the Russians are fighting right now, they're really exhausting themselves, and they're not really making good progress in their mission to take over Ukraine, right? So, yeah, they're exhausting themselves and they have very little to show at the moment. And the Russian high command knows this, and they're in a rush to kind of complete their mission as well. And regardless, I think that the sanctions are really going to start to bite, right? So if it hasn't started biting already, which I would argue that it has, but it's going to start to bite more as time goes on, as Russia runs out of parts for like this and that and stuff like that, as they're being sanctioned. So I think that they want to finish the war as well, so that they can come to the negotiating table to try and get some of these sanctions removed once this war ends, whether it be, they negotiate with Ukraine first, come up with some sort of agreement that they could both be satisfied with, and then go back to the negotiating table with the EU and the Western countries, and negotiate to maybe try and have some of the sanctions removed, right? And if you think that the West is going to be like, no, there's no way we're canceling any sanctions, we're not going to negotiate with Russians, well, don't be so sure, right? You could be surprised. And this is because the sanctions are actually hurting Western countries as well, right? Because Western countries used to get a lot of resources from Russia, and now they can't get those resources, namely oil is the big one, right? But also other stuff like fertilizer and whatnot. The EU and the Western countries, NATO, they're going to suffer too if these sanctions drag on for too long. So they also have an incentive to maybe lift some of these sanctions in the future, but they can't do that if Russia is like trying to like still bomb Ukraine all the time, right? So the war has to end first, and then we can talk about maybe lifting the sanctions at some point. My point is that everybody kind of has an incentive to wrap up this war, and like no one wants to drag on this war for a long time, right? So because of a multitude of reasons, I really do believe that this war is probably not going to last more than say 6 months from now, and that's me being very generous, right? So if you think about it, 6 months from now, that's kind of the end of summer, beginning of fall, right? So yeah, I really don't think it's gonna last quite that long even. I picture it wrapping up by like beginning of summer even, or at the very worst, I guess, is like middle of summer, but even worse than that, maybe like beginning of fall, as I said. But yeah, the point is I really don't see it dragging on for a long time. I should note that there is a small chance that somebody drops a nuke, right? Just saying. If that happens, then all bets are off, right? Granted, that's a very, very small chance, in my opinion, and I don't think that will happen. Knock on wood, right? That's if a nuke is used, then all bets are off. But assuming that doesn't happen, then I think there's going to be a short war. In terms of inflation and sanctions, I think we talked about sanctions just now. I think inflation and sanctions kind of go hand in hand, right? Because of the sanctions, it makes trade harder, it makes commodities more expensive, it drives up the price of oil, and everything needs to be transported using oil. So that drives up commodities in general, and it drives up the price of food. Pretty much everything goes up, right? However, assuming that there is a short war, and I hate to use this term, but inflation, I think, is going to be somewhat transitory, right? So, I know there's a lot of baggage with the word transitory, but I think that the word is appropriate in this context because assuming that the war wraps up, then I do see that the inflation problem is not going to be as bad come late summer, fall area, by October, if inflation is still at like 8 to 10%, then maybe my assumption is wrong, right? And at that point, maybe we should talk about switching strategies when it comes to investing. But going forward, I'm going to stick with the idea that inflation is going to come down, and it's going to come down within a few months from now. It's probably going to still go up for the next few months, and then it's going to peak probably early summer, late spring, and then it's going to start to drop off around the fall-ish time, right? So that's my assumption anyways. Again, I could be wrong. Yeah, looking forward in terms of massive debt, that is another thing that was brought up. In terms of massive debt, I assume that Mr. Kim is referring to the debt by the government. And I agree that this is a problem, like the money printing and the borrowing. But in the short term, the government can always print more money. You guys know I'm a big believer in Bitcoin, right? So that's my hedge against money printing. But even myself and a lot of people in the Bitcoin community, I think the general assumption is that the US dollar is not going to go anywhere anytime soon, right? Sure, the US has a lot of debt, but it's not like the US dollar is going to collapse anytime soon, right? So the US dollar is not going to collapse within a matter of like a month or like even a year from now, right? So if we're talking like 50 years, 100 years, like, yeah, there's a good chance that it might collapse, but yeah, within the next like few months or next year, if we're talking about like an imminent recession, I really don't think that the debt is going to matter that much, because the US Fed always has, it still has room to print more money if needed. And this also ties into what I was saying about how it might actually be a lot harder for the Fed to raise interest rates, judging compared to what they've been saying, right? So they make it sound so easy. They're going to be like, oh, we're going to raise interest rates to 1.75% by the end of the year, and they're promising to do that. But in reality, I think that if the fundamentals of the economy start to downturn, then they might not want to raise interest rates anymore. And they might take a pause at the very least. I do agree with the idea that the market is going to be extremely volatile. But I do think that the narrative surrounding these kind of bricks in the wall of worry is starting to come down. Is actually very bullish. It's a very bullish sign for the market, right? So there's two ways you can look at it. So you can say, oh, how can you say that the market is going to do well when there's so many bad things happening and there's so much fear? And that's an argument that you can make, right? Or you can argue that, hey, maybe the market will do well because things are really bad right now, but all of these bad things are expected to get better. So this wall of worry is starting to come down. And then the market is forward looking, right? So the market is going to anticipate that things are going to get better in the coming months and then start to price that in. And then once it starts to price that in, then stocks will go up, even though there's still a lot of bad things that are happening and unresolved problems, right? So that's the kind of camp that I'm in, like the second camp. Maybe the commenter, Mr. Kim, maybe he's in the first camp, right? So, different opinions, right? Lastly, regarding what I said about regretting buying back in January, to be honest, I was just kind of frustrated and I was lamenting and I was venting to you guys a bit because I could have bought at an even lower price in March and February, right? But in reality, there was no way for me to, accurately predict exactly what the stock market is going to do on a month-to-month basis, right? So how could I have known that January wasn't the bottom, right? So, hindsight is 2020, that's like the type of deal, right? So how could I have, accurately timed the bottom? You can't, right? So even people who have been investing for a long time like me, I'm not perfect, right? I can't time the market perfectly. What I will say though is that I'm still macro bullish, right? Meaning that I think that in a few years from now, I'll be able to look back and say that it doesn't really matter if I bought in January of 2022 or March of 2022 because I would have made a lot of money by then, right? But again, we'll have to see, right? I think that the worst thing that could happen is that you just hold a bunch of cash and you're trying to time the bottom and then you miss the bottom because you think, oh, like January is not a good time and because February went down even more, right? And then you're like, okay, I'm not going to buy in February because March is going to be worse. And then March is actually worse. And you're like, oh, I'm so smart. I avoided this like huge crash. But then you never, because you were afraid, you never deployed any money in March. And then the market started going back up, let's say in like April, May, whatever, right? And then you're like, oh, it's just a fake out. And then you just continue to hoard money and then you never invest in anything. So then, you miss the ride back up, right? So I saw a lot of this kind of mistake being made in March of 2020, actually. So only 2 years ago. So it wasn't even that long ago that this mistake was made, where a lot of people, because they were so afraid of the COVID pandemic, that when the market crashed back in March of 2020, people are like, oh, I'm not going to invest. Like, there's no way I'm investing in this market where, the world is shutting down and like there's so much fear going on. Well, look at what happened, right? V-shaped recovery. Again, I'm not saying that it's going to be the exact same thing is going to play out this year. I'm not saying that there's going to be a V-shaped recovery or anything like that. But long term, I do think that it is worth it to buy the dip, especially on great companies. When you see, let's say, I don't know, Shopify or Square or PayPal, these stocks getting absolutely destroyed, but their business model is great and they generate a lot of value for the economy, and a lot of them generate a lot of profits too, right? Bring down a lot of money to the bottom line. So that's just my opinion though. As the old saying goes, bull markets make you money, but bear markets make you rich. Again, not financial advice. Let me know down in the comments what you think, whether you agree with me or still disagree, or let me know your opinion. Constructive feedback is always welcome, and I welcome people who disagree with me. So with that being said, thanks for watching this video, and be sure to subscribe to the channel if you're interested, and be sure to follow me on Twitter and Instagram. Links for those are down below in the description. And as always, I'll see you guys in the next video. Bye-bye.